Chicken Genius Singapore has now just bought $300,000 worth of Tesla stock. There are things that I disagree with that Chicken Genius believes, and when it comes to Tesla stock, I mostly agree. Let me play this clip for you. If you buy this, it's on sale right now. It's from the peak, it's down basically 50% almost. It could drop lower. There's a good chance it will. Most likely, actually, it will drop further. Notice how I said almost 50% down, and notice how in August it was not 50% down. That's because I was talking about May, and I was telling my brother, hey, look, right now is a good buying opportunity, and he bought. And then in August, I told him, hey, look, you gotta sell now if you are not willing to hold long term. Here, I told you, go in, hold long term. Now, if you want to exit, now is the time to do so. Here's a screenshot from my brother's account. He bought just under 700 euros per share before the split. He dollar cost averaged, which after split is 236 euros. And when I made that video about my brother, where I talked to him and told him basically sell now or years later, Tesla stock was at $900 before the split, so $300 per share adjusted for the split. We have a lot of new people watching this channel, so I wanted to say that one more time. I just want to make it clear, I don't expect Tesla stock to just keep going up and up and up and up without any major bumps. Today was a little bit abnormal. Everything is going down. Tesla, you can see the little green box right here, went up. There's a lot of news today. We'll dig deeper into everything. Also, ARK Invest is buying Tesla stock, but they do have a lot of room to buy quite a bit more Tesla stock. But here is one of the biggest reasons why, despite generally agreeing with Chicken Genius Singapore on Tesla stock specifically, this is why I keep buying. 99% of actively managed US equity funds underperform. 99%. So sure, you can look like a genius for a little while, and that's great. But just give it enough time, and it's unlikely to continue, unfortunately. Also, Ken is retired already. At least this is what his YouTube bio says. So despite agreeing on Tesla stock specifically, we can still take very different actions despite having the same conclusions. This is Bridgewater, the world's largest hedge fund, many say, by Ray Dalio. And you can see that Bridgewater's returns in blue over time are a lot less volatile than the market right here. In the end, you get the exact same result. But if you are close to retirement, then you want a smooth ride. And in most videos, or many videos, I keep telling everyone that I am a conservative investor. I do have real estate, by the way. This actually makes sense for me. I really like Warren Buffett approach. He says here, I don't think we have ever made a decision where either one of us has either said or been thinking we should buy or sell based on what the market is going to do. Buffett added, referring to his longtime business partner, Charlie Munger, or for that matter, what the economy is going to do. Warren Buffett looks at the business. If he likes the earnings, he likes how the business is doing, he likes the mode of the business, he buys it. If he likes the current price at that time. And then if it goes down, he's happy. He just buys more of it. Warren Buffett has delivered an average annual return of 20% for shareholders since the beginning of 1965. That's such a long time. So everything that I do with investing comes from Warren Buffett, number one, and Charlie Munger, number two. So even though in May, I thought Tesla stock is most likely actually, it will drop further. This is me talking about May, when Tesla stock was at 236 euros per share. So even though looking at that, you would think, oh, Matt, you should be trading. You would have made so much more money. But when I look at the data, I look at history, I look at the world's best investors, basically Warren Buffett, Charlie Munger are my favorite ones. They don't even try to time the market. And 99% of actively managed US equity funds underperform. It's a waste of time long term. If I was about to retire, it wouldn't be, but I am never planning to retire, and I'm still very young also. All I just care about strong fundamentals. I care about profits. I care about the long-term health of the company. I want to hold Tesla stock at least until the end of 2030. I bought it in early 2019 with an intention to hold it for at least 10 years. I look at reports that look at the company's overall health. For example, Morningstar here says, with no company-specific news other than Musk's stock sales, we see no reason to change our Tesla forecast. As such, we maintain our $250 fair value estimate and narrow moat rating. At current prices, we view Tesla shares as undervalued. I care about the company's growth. Here, Morningstar continues, reduction of electric vehicle subsidies in key markets such as China and some European countries will hurt demand for Tesla's cars. However, Tesla should benefit from the US federal subsidy for its Model 3 vehicle as a result of the Inflation Reduction Act. This I call the Tesla Enrichment Act. Given this and the company's relatively small volume of 1.2 million deliveries on a trailing 12-month basis, there is still likely to be strong demand even in an economic slowdown. We continue to forecast that Tesla will deliver nearly 1.4 million and 2.1 million vehicles in 2022 and 2023 respectively. How much will be produced next year? How many deliveries will we have next year? And more importantly, a year after that, and then a year after that. That I really care about. If everything goes as expected, and even if it goes worse than expected, or my expectations are, then the future for Tesla, I believe, is extremely bright. Here's another spreadsheet I care about. This is from Gary Black. He's one of the bigger bulls when it comes to institutional investors. And you can see that his earnings per share for next year, 2023, is set at $7.20 versus the Wall Street's expectation of $5.57. Now, this has some assumptions in here, one of which we'll see how this turns out, how the virus is in China. That is, a big question for next year. Hopefully it's all okay, but hope is not a strategy when it comes to investing, right? So we'll see how it goes. And here we have some good news. The Tesla board could not approve Elon Musk's $3.6 billion worth of Tesla stock sales from December 12th to 14th if Elon was in possession of material non-public information. These sales were not 10b5-1 sales. Odds of a negative 4Q surprise are therefore likely low, which is really good news. The fourth quarter trading window is going to be closed tomorrow. Also, the Cybertruck is believed to have 1.5 million reservations, and I agree with this as well. Tesla is the biggest winner from the Inflation Reduction Act. I made a whole video about that Tesla Enrichment Act. It's pretty good stuff that they are putting in there for Tesla. Also, we heard a lot of production cut rumors, but here Tesla itself is directly telling us that Tesla will make every effort to produce in December this year. Reading this, you would think there is no production cut then. That would also be really good news. Now, we did end up with quite a large trading volume today, but that does not mean that Elon is selling today. Here's why. All ETFs and funds indexed on the S&P 500 need to rebalance quarterly. And now, how to sell Tesla stock. Tesla stock lost 45% in the last 3 months. S&P 500, only 5%. So higher volume is indeed expected. We'll see if Elon sells. Hopefully no more sells, Elon. Remember a report from earlier about Elon Musk potentially going to Mexico to open a factory there? Well, now there's another development. It looks to be more likely that there is going to be a gigafactory in Mexico. So this story is progressing. This is also good news. This is just hilarious. After the 22 million shares sold, Elon's trust still owns 420 million shares. Tom says that he's not kidding and that the number is true and accurate. Is Tom talking about all of Elon's shares, or is he talking specifically about this specific trust, I wonder? Either way, that would be a good indication possibly that Elon would be less likely to sell going forward. I mean, why would he want to have less than 420 million shares, right? Kevin is saying that Tesla is selling for roughly 13x of his 2025 projected earnings per share. This is assuming that Tesla grows its earnings by just 30% annually. I thought Tesla stock was a good deal at $300 per share. But at current prices, it is getting quite preposterous. I mean, before, I was really only investing in Tesla, believing in full self-driving. That was the main reason why I kept Tesla stock. But now I'm starting to look at the EV business and I'm like, even for me as a conservative investor, I am starting to think it's not just full self-driving anymore that will drive a stock back way up, in my opinion. It's also going to be the actual EV business as well. I'm happy to have Chicken Genius Singapore back as a Tesla stock bull. Like I said many times before, I would love to see more content from him. His videos are very entertaining. So maybe after making Tesla stock drop, maybe he will now make Tesla stock go up. Although I hope he does not yet because I'm accumulating still. These are 48 reasons why I only own Tesla stock in my stock portfolio. My name is Matt Postis. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.